Food prices have again powered retail inflation in May, though the overall consumer inflation moderated to 7.04% from the 8-year high of 7.79% in April. The increase in vegetable and cooking oil prices remained the biggest factor in overall inflation. Both remained in double digits. The overall food inflation also eased marginally to 7.97% from 8.31% in April. Despite the fall, inflation remains much above the 6% comfort level of the RBI. In fact, the RBI had last week forecast inflation above 6% for the first 3 quarters of this financial year. We're joined by Sunil Sinha, Director and Principal Economist at India Ratings. Sunil, thanks so much for joining us. Take us through what you're making or how you're interpreting the latest numbers. Just a marginal moderation, still uncomfortably high.
Yes, it is still out of the comfort zone of RBI. So while one may feel a little better when one sees the number dropping from 7.79% to 7%, but in effect, it is still on the higher side, and our expectation is that from June onwards, as the base effect starts waning till about October, November, the inflation will remain on the higher side. I mean, despite the fact that some comfort one can draw from the fact that the excise duty cut on petrol and diesel prices, though not reflected in the May number, will start reflecting from June onwards.
Okay. So, this time around we've seen, of course, vegetable prices really being the major contributor. What are you most worried about, Sunil, going forward? Is it going to be continued supply side concerns? Is it going to be those crude prices that continue to spiral? Because we're seeing this now as a global conversation. We've seen how markets have been reacting to the kind of pressure we're seeing on the back of these inflation figures.
So far as geopolitical situation at the global stage is concerned, I don't think that there is any clarity about that. So the volatility, uncertainty, all of these will continue to play out, and which simply means that the pressure on commodity prices are unlikely to ease. And India being a net commodity exporter, we will have to, go along. The only way some comfort can be provided to the Indian population is through the customs duty. And in case of petrol and diesel, the government has already done that. Some bit of it has also been done in case of, edible oil. And at the same time, some restriction on wheat exports and some of the other commodities. So net, the situation is that, there is very little that India can really do about what's happening on the global stage. I mean, that's something which is given. However, the positive aspect of looking forward is that the monsoon is expected to be normal this fiscal. And if it plays out according to the Met Department's prediction, then some of the food pressures that we are witnessing right now may somewhat ease. Not so much on the edible oil, but certainly on cereals and pulses and so on and so forth. And also the vegetables.
All right, Sunil, thank you so much for joining us and taking us through the latest implications of those spiraling inflation numbers.
If you like the video, do like, comment, share and subscribe.